Hello traders, this is Rich from TradeSight. This is a look at our market preview for the coming session, Tuesday, June 26, 2013. Clearly had another distribution day today with all the major averages lower on the day. The ES was lower by 17, the NASDAQ futures by 21, and the Dow Industrials by 140 points. Additionally, there was some more internal damage done, and we'll take a look at that and more. But first, let's take a look at the construction of the major futures contracts. Alright, so here's a look at the ES futures. You can see that we made another low close on the move. So we've extended the range to the downside on a closing basis, and you can see also an intraday basis as well. A couple key features here technically. We've broken now and settled below the active static trend line, which releases the energy from the pattern above. We're below the 10 EMA and the 50 DMA, but still above the 200. So all those are stacking up on the negative side. Another negative to keep in mind here is that we do have this cross in the MACD and penetration of the zero line. So you can see that when we did that, we were starting to pick up momentum to the downside. While here we were trading laterally as the MACD was rolling over. Now that we've got the penetration of that zero line, we're starting to pick up downside momentum. So for now, the intermediate and short-term outlook is negative. Key support is going to be obviously this 2-ace level here at 1562.50. Next near-term support is obviously going to be the previous day's low, and then the 1-ace level at 1531.25. Overhead, previous day's high is resistance, and then there's more substantial resistance at 1593.75. All right, now looking at the NQ futures, we have essentially the same design of the market with a little bit more acceleration to the downside. Right now we're getting fairly close to key support at 2812.50. This is key support because it was resistance here before this breakout, and it's also the 4-ace level on the Murray Math box. You can see the distance that we're getting below the 50 DMA, which makes us a little bit short-term oversold, but certainly not terminally so, that we should expect a lasting bottom here at this point. To the downside, support is going to be this 4-ace level, and then the 200 DMA is coming in at 27.75 or so, and that will be the next area of key support. Resistance, if we pivot back to the upside, is going to be 28.90.5, and then this gap window is going to be very, very key if we can get up there, which is going to be the 50 DMA coinciding with approximately 10 EMA and the 7-ace level and this gap on the Murray Math box. So that's going to be a very, very important level if we pivot back to the upside. Now taking a look at the market internals, you can see that the cumulative advanced decline lines continue to have this negative structure to them. We're rolling over here on the key New York Stock Exchange side, and we're actually picking up even more velocity on the NASDAQ side. All right, so here's a look at the cumulative advanced decline line with the S&P. The S&P is red. We're actually starting to catch up here now. The decline in price has been so rapid in the S&P. We're actually getting close to being back in sync. We had the cumulative advanced decline line, the blue graph here, leading to the downside. Now we're finally starting to catch up here in price. Key takeaway here is that the cumulative advanced decline line, especially tops, tends to lead the overall market. So we're actually starting to get some convergence here. We're starting to come back together a little bit. That in and of itself is not necessarily a positive. It just means that that divergence is starting to take care of itself. Now, as far as the individual sectors go, you can see that we had weakness pretty much across the board. The only place to really hide today was the BTK. The BTK was the first thing to roll over here, so that selling has already gone quite a ways here as far as the growth sectors go. So this is starting to level off here a little bit. If we were to return back to the upside, I wouldn't be surprised to see that one actually be a leader on a bounce when and if we're ready for one, just because that was the first one down out of the growth sectors. The troubling thing here for the defensive players is that the XAU continues to rake out new lows, so there's really no place to hide there. Pretty much everything was down across the board today as far as the individual sectors go. So it's definitely a tough day as far as portfolio performance by pretty much any measure. All right, so here's a look at the total put-call ratio. We did hit that extreme area here. We got over 1.25 on a closing basis. I think that was one of the things that actually kind of buffered the market today, since we just freshly gotten that reading. So this definitely was keeping a little bit of a bid under the market today, and I think kind of arrested the slide to a good degree. We closed just a little bit below where we opened on both sides as far as the NASDAQ and the broad market futures go. But got to keep an eye on this for another breach of that reversal threshold where we could get a little bit more of a pop and make perhaps a second pivot back to the upside here. All right, now one more internal thing to take a look at. Here's the 10-day trend. This is the 10-day average of the ARMS index. We are starting to really curl up here. We had a decently high close today in the trend at 1.34, so that's going to figure into the average and start to elevate that a little bit. We're still a good deal away from our 1.35 area, which is that classic oversold region. So we do have a couple more days here probably before we get that reading, unless we get a real sharp move up tomorrow in the 10-day trend. But things are certainly short-term oversold. We do have that climactic put-call ratio reading, so we could see some kind of an upside day tomorrow. But there's really no evidence yet that aside of a relief bounce that may last for a day, 2 or 3, that we're going to revert back to some upside. The other key consideration is that we're starting to get towards the end of the month and the end of the quarter, which is going to happen this Friday. So if we're going to see some window dressing, we'll probably see it Tuesday, Wednesday, maybe Thursday, but probably not. Probably Tuesday and Wednesday would be your two key days. Maybe a little bit Thursday, Friday being the last day of the month. I wouldn't count on seeing too much strength. They usually do their window dressing before the actual last day of the month and quarter. All right, folks, and here's a look at the individual sectors ranked from best to worst. As we had indicated before, the BTK was the best performer of the day. That was really the only major that was up on the day. The defensive-minded utilities were a little bit higher. Pharmaceuticals were higher, and some of the energy names were a little bit higher. I think the one theme here to look at is with the utilities being better, the pharmaceuticals. I think what we're probably looking at is a little bit more of a return to normalcy here. We had a lot of selling as yields were moving up in the utilities, the pharmaceuticals, all the dividend type paying stocks. So if we do pivot back to the upside here, keep an eye on those for some better performance back to the upside as some of that selling pressure abates. They really started hitting those very, very hard. And they kind of led things to the downside here, and even the transports. So keep an eye on that. Last lagger today was the XAU, which is really still kind of just slugging along the bottom here. Now it's very, very oversold, but still unable to pivot back to the upside. All right, so here's a look at the TLT, which is the ETF surrogate for the long-term government bonds. What I want to point your attention to is on Friday we got a seeker exhaustion buy warning. So what we had was we were looking for this to pivot back to the upside and to be in play on the long side today. Today in the trading lab we did take a long position in the TLT that did close positively on the day. So if you still have some of that, we're going to look for this to pivot back to the upside. And the first target is going to be this gap right here, and also the 10 EMA at about 111.22. If they do continue to come in and look for this asset as they're trying to get a little bit more defensive again, then we could see this 112.50 at 4/8 come back in play. Again, this seeker level, the seeker risk level here for this trade is going to be right around 10, call it 106.5 off this exhaustion buy. So definitely keep an eye on this. This is definitely something that could be in play on the long side when a lot of other different things are going to be weak for a little bit here. And here's oil. Oil was higher on the day. Was one of the few asset classes, assets to hide in. If we do pivot back to the upside, just note that we were able to still hold this 4/8 level and also the 50 DMA. So we're still on the north side of that with a very sloppy intermediate upward bias. We didn't really change that yet because we didn't close below the 50 and then follow through to the downside on a closing basis. So for now, we do have a sharp break here That's got the chart short-term negative, but it's still neutral or intermediate term positive. And let's take a look at the gold futures as well. Gold futures are still trying to find a bottom. Haven't done anything convincing yet. 1250 is going to be the real support here. That's the zero race level on the Murray Math box. Not going to see any positive momentum here until we get back up above that 10 EMA for sure. You can see we've been below the zero line here in the MACD all year so far, and have really not been able to cross back above that and get any positive momentum going. So the takeaway from today's price action is that the market internally is still very weak. Our classic oversold indicator of the 10-day trend isn't quite there yet and still has some more room to the downside. But we do have that climatically bearish put call reading of greater than 1.25, meaning that people were just running for cover and the bears were just taking on a lot of protection, which is a contraindicator. So that does indicate that we could see some short-term upside here in the market tomorrow or the following day. So let's trade one candle at a time and see what the market gives us. As always, thanks for listening. This has been Rich for TradeSight.